Hello, my name is Steve Bigelow with the Candlestick Forum. In these market conditions, knowing the direction of the market with a high degree of probability, you can enter some very strong trade entries. So right now, the market is obviously still in a downtrend. And why is that? Every time we hit a resistance level, strong selling. Every time it hits the T line, strong selling. Simple analysis. As long as the indexes continue to trade below the T line, the downtrend is in progress. And when you're breaking support levels and even gapping down through those support levels, it usually implies there's still going to be a lot of force uh, heading lower. This allows us, knowing that we're heading in this direction, to utilize what we know about the candlestick signals and patterns. We know exactly when to enter, like on a dumpling top, when you start getting big sell signals below the T line, giving you some good profitable trades. We also know when the strong trades are very visible, like a bearish kicker signal, or when you see a bullish move that fails at the T line and comes back down, get ready to go short the next day. That's a pretty good indication the bears have given up, the bulls are still in control. So you've got that type of illustration, Daku, gap down through the T line, a shooting star Harami gap down. And then you can see every time they take it up and hit a resistance level, they start selling off after that. That's a pretty good indication that the bears or the bulls have given up, the bears are still in control. So we put the probabilities greatly in our favor by knowing if we've got a strong downtrend, we know when we might want to take profits on a short position. And look at our bearish engulfing signal. What's that illustrate for us, that 2+2 analysis? One, a bearish engulfing signal right smack dab on the T line. And two, what type of pattern is that likely to be setting up? A bearish J hook pattern, wave 1, wave 2, wave 3. You can be reshorting right in here with an extremely high probability you're still heading down. Amazon broke down through the T line, hit right smack dab on a support level that everybody was watching. Then you had the bearish kicker signal, and now you're starting to see when they pop it up, they can't get it up to the T line. They took it up yesterday, couldn't get it through the T line. So now you're sitting at a level where you can utilize the candlestick signal information. You've got a doji right here. You might be considered in the oversold area. That gives you two prospects. One, the doji rule says if it opens positive, it's likely going to be trading positive. If it opens lower, it's likely going to be trading lower. And if it trades lower, what type of signal can we anticipate? There's your bearish doji sandwich setting up. So if you're trading something like Amazon, you have an extremely accurate analysis of what it should be doing based upon that doji. Best friend signal, gap down. Shooting star, failure back below the T line, it's going lower. Comes up through the T line, fails again, shooting star, it's going lower. This is not rocket science. This is just the illustrations that the Japanese rice traders have provided for us over hundreds of years, telling us what happens or what the results are when human nature can be identified with the signals and patterns. Nvidia, still in your bearish J-hook pattern yesterday, came up very strong. But the fact that it closed back below the T line told us if it opened lower today, you could be shorting it immediately. So right now, we don't have anything that tells us there's any bullish sentiment. So the logic is you can stay short until you see a buy signal to close above the T line. Doesn't dismiss the fact that you might see some bounces. But even if you're seeing a bounce and a downtrend, individual positions are probably going to still continue as long to the downside as long as they're below the T line. So you can take all that information, and when you put it all in order, we're going to be doing what we call the ultimate candlestick training tomorrow. No, Saturday. This is where you put everything into the analysis, what the market trend is doing, identifying the strongest signals and patterns that coalesce or coordinate with that trend, the confirming indicators, improving the probabilities, and then your high probability entry, what you would visualize to say, this is when I should be back out of a trade, and how long do I stay in this trade until I want to take profits. When you have all that put in your mind in one visual glance, that takes the emotions out of your trading. Now you're not at the mercy of listening to somebody else's advice or getting panicky when the market bounces the wrong way. And I'm not saying this as sage advice. I'm saying this as a voice of experience, being the worst investor in the world before candlesticks came along. Now you at least have a high probability analysis of what direction a price move is going and when you should be back out of that trade if it doesn't work. That'll be it. We'll see you in the chat rooms.